Well, g'day there everybody. Thanks for joining me on this Wednesday afternoon market recap. Once again, volatility continues in this market. Today we have on the Dow Jones Industrial Average that of a sort of inside day harami. Again, you can see this pronounced lower and also upper wick. We did close down just over 90 points on the daily chart. However, again, a lot of indecision in this current market. This is after the major waterfall sell-off that we've had really over the past 1.5 weeks. It does seem to have bottomed temporarily. What I'm looking for really to set up, and we're sort of seeing this to an extent in the transportational average right now, is to see some form of a bounce to the upside. That's really what we've established at the beginning of this week, but then ultimately to see this sort of pitter out, to stop, and then to reverse and come on back down and essentially retest some of the same critical areas that we have just priced in recently across the board collectively for the US market indices. Right now, in my own personal opinion, it's not really conducive for jumping into a bunch of new swing trades. We spoke about this over the weekend. A lot of the damage, or at least the setups, were really placed up and around this location over here as the market's really stagnated, and they were looking to either break and continue to the upside or to see ultimately the breakdown. Now, obviously the breakdown occurred, and as such, we're just settling through again this sort of persistent volatility once, or up until, of course, the dust settles. So we are very early on in that process. Again, I wouldn't be all that active if you're looking for swing trades in this market. We have seen, relatively speaking, a couple of wild rides over the past 3 days of trade, and this is going to persist and continue probably into the back end of this week. It wouldn't really surprise me if we were to see a little bit of a pullback or even a bounce. However, whatever direction that ultimately moves in, we should see a counter move set up come next week also. So again, rather futile if you're looking for some material sort of longer term directional swing trades. What is going to happen most likely is that we are going to essentially mean revert back into where we established the closing price as of last Friday. Now, this is the chart of the Dow Jones Industrial Average. You can see on the weekly print at the moment, we are up positive 365 points, but in the face of the previous week's candlestick, it is rather immaterial. So a lot of people celebrating that the markets have bottomed. Yes, I am in agreement with you. However, don't be surprised once again if you do see volatility begin to spike towards the back end of the week, if you do see this waterfall sell-off continue to push on back down roughly to this 25,000 area on the Dow Jones Industrial Average. Personally, I'm not looking to jump into any longs at the moment, although we did speak about this over the weekend. It is going to be most likely a very short-term move until we get more so of a structural bottom upon which there is a foundation for a more legitimate move higher towards the back end of 2018. Here's the chart of the S&P 500. To me, this is somewhat looking like that of a bear flag continuation. It's not textbook, it's not perfect, but it does take the general formation. So if you start to see price move below the low of today's session, if not yesterday's session, that is most likely going to move back into this lower area at 2,725, but at the same time, we could come on down a little bit lower, down to 2,675 on the S&P 500. Here's the chart of the Nasdaq. This is what you need to pay attention to. This is what we're calling a little bit of a confluence area, that being very similar to that of a rising or an accelerating sort of triangle, okay? Now, we're back above the triangle perimeters. You can see that this is the top, the horizontal resistance area, and technically the rising support. We got down into this last week. We've essentially bounced out of it very, very quickly, but look for price action to come all the way back down and most likely linger between 7,350 and about 7,500. That is where I'm looking for the dust to settle. And then, of course, what we'll do is we'll talk about structural swing trades, where we can essentially just set up the bullish continuation at, say, 7,575 once price gets back down into this area down here. And then ultimately, we could also set up bearish continuation trades below the swing low that was priced in over here on the 11th of October. So again, best idea, in my personal opinion, is to simply just sit on the sidelines, let this market act like a little child. It is going to be rather volatile and rather undisciplined as well. And because of that, there's really no need for you to jump into the market, especially after you've taken, or if you've taken, a bunch of these short trades over the past 1.5 weeks. Here's the chart of the Russell 2000. Again, a little bit of a bounce, naturally off from extremely oversold short-term territory. We're just recalibrating a lot of these oscillators out of that oversold level. But again, this is rather futile in my opinion, as there's a very good chance we're going to come all the way back down below 1,550 on the Russell 2000. I want to point out, however, I'm not expecting this market to move into that of a sort of a prolonged deeper correction. Just essentially what happens is, after you get these really big moves, these sell-offs one direction or another, the market has to settle. And if you look back to I mean, if I go back to some of these other charts, after you get these waterfall sell-offs, volatility lingers until you essentially set up that foundational base. Again, on the S&P 500, we almost came all the way back up to close the window before selling off back down to the original support area prior to what has been a relatively sort of bullish grind higher for really the majority of 2018. Here's the same thing. On the Nasdaq, again, leading into the back end of January, the sell-off, we made new highs, but again, back down to this foundational support area. Now, the one market I haven't spoken about very quickly is the Dow Jones Transportational Average. Let me just change the first character here to a $sign so I can bring the correct chart up for you. And immediately to me, I can see a candlestick really just very different to what we've printed essentially on the other charts that we've looked at. I've spoken about some of the haramis with those pronounced upper and lower wicks. We can see that this is sort of a bearish counterattack, right? A piercing pattern. You can see we gapped up and then we've actually pierced at least halfway or very close to halfway into yesterday's white real body. This is telling us that the handbrake already is being pulled on the transportational average, and what you can expect really is to not see the transportational average really materially break above this level. Yes, we can push above it intraday, but this candlestick suggests to me that again an impending retest of 10,370 is imminent. It may not happen actually on Thursday, it may not happen on Friday. Most likely we are going to get down to this level again by the back end of next week upcoming. All right, so I just wanted to point that out. A very bearish candlestick here on the transportational average, but I also just want to press or impress that overall, when you're talking about the intermediate and also the macro level of the trend, both of those trends are intact, so to speak. Yes, we have moved back down into lesser sort of decelerating fan lines, but as a whole, if you're thinking about a series of higher lows and also higher highs, although we do have, divergence, this market is still technically sound. I've seen a lot of articles at the moment written about how structurally the market's damaged, and yes, to an extent that is true. It's more so on the molecular level, which doesn't really impact the larger and broader trends of the market. It's not until we essentially start taking out the lows that we have priced in the calendar year of 2018 where we would need to see, or at least become concerned. Also, we want to pay attention to the spreads of the 2 and 10 year. If that starts to blow out more than, I guess, the 6-month rolling average or the 6-month sort of historical extremes, that's going to be another sort of indicator to us that maybe things are shifting along with the tick up in unemployment, but at the same time, we're not seeing any of those events actually occurring. If anything, they're moving in the opposite direction. They're still strengthening, which is very interesting behind, I guess, the macro backdrop of this equity market. Now, this week, we have moved into earnings season. Netflix did see a gap up today. However, we do have a dark candlestick and we have an open window. So expect Netflix to come all the way back down to $350. When we get to this area, what's most likely going to happen is that we're going to set up a Bollinger Band squeeze, upon which we will set up a bidirectional trade in the future. At the moment, however, it is a little bit risky to go short. There's not a nice risk and reward ratio here, nor on the upside. If you were thinking about taking a swing trade above the highs of today's candlestick, you still have this gap up here that we've been really focusing on really throughout the majority of August since we started taking long positions at 328. This was after the sell-off from 350 down to 333 that we hit in 2 days. But really, once this window closes up here at 400, this is most likely going to actually happen after we set up the Bollinger Band squeeze after the pullback to close this gap here. So Netflix is a trade in the works. Earnings was today, so that was a major market mover. Also, sort of counteract that was really IBM. IBM got hammered today, down $11.10. Another gap, however, this is in the opposite direction. So somewhat the polar opposite of what we were talking about just then on Netflix. You can see how there is, broadly speaking, short-term indecision in the marketplace. And you're seeing this at least picking up between Netflix and IBM. So as IBM has gapped to the downside, we have established, I think, a new 52-week low. However, we still have this open window here. And generally what happens is if you have a look at this chart here, it looks as though we are in some form of a channel, a decelerating, declining channel here. Generally what happens is, although the weekly chart, or at least the candlestick, is entirely broken, I can see that it's down $6.83. We have an upper wick. Yes. It's all because of earnings. Generally what happens is if the market does bounce, which I am expecting it to do towards the back end of 18, you're going to see IBM ultimately stabilize and then move back up to 142 at a minimum. And that's essentially where we will look to initiate the next swing trade. However, if we do get a legitimate sort of basing pattern, there will always be the opportunity to trade this back up to close this window, and then the secondary trade will be the outcome, the bidirectional spread up here at 144 to 140. Okay, I'm going to speak about this more in Pivot Point Pro, so I'd encourage you to have a look into that analysis class next week for us. I think the 23rd through to the 25th, it's going to be a very, very, very busy week for us in earnings. More or less the entirety of our top 12 individual trade list would have reported up until the 25th. There are two outliers, I believe, on the 2nd and also on the 3rd of November. But again, that information is up in the private area where those pro analysis classes are held, those 1.5 hour analysis classes of the markets in our top 12 individual trade list. Other than that, individual stocks themselves, relatively mixed. Last week or over the weekend, we spoke about taking a lot of those trades off if we did begin to see a market bounce. So I'm expecting the majority of people began to do that, if not culled some of those indice trades as well, at least bank some of that profit. It was a tremendously profitable week for us last week. And again, you get these follow-up weeks where it's just simply best not to do a whole lot. And that was really the narrative over the weekend. And I'm still very happy in the analysis holding true up until, again, the close today, but again, expecting potential weakness to ultimately retest this support area. Once we do this, okay, that's when we will start becoming laser focused in our trade analysis, looking for more sustainable sorts of bounces or even breakdowns as well. I don't want to discount the opportunity of that actually happening also. So if you have any questions, email me, success@pivotpoint-trading.com. Enjoy your Wednesday evening, everybody. I'll be back with you later in the week, and I look forward to bringing you again the pro class this coming Saturday. All the best. Farewell.